The next problem, problem 2 is on Metro General Insurance Company. Again, you are required to prepare a revenue account in this problem and only revenue without calculating or without preparing the profit and loss account. So accordingly, some information is given related to all the items like premiums, claims, expenses, commission and so on. So every schedule we have some items that are provided to us. Besides that, some additional information is given related to expenses. Okay, this is additional information. You don't have to read it like this in this line. This is just additional information. Expenses are given to you, and also how much should be the reserve for the current year as against the reserve that was maintained during the previous year. All that information has been provided. Okay, we will see that later. For now, let's just discuss where all of these items will go and how we are going to account for them, how we are going to show them in our revenue account. Okay, so we have 4 schedules as we know. Schedule 1, premiums, claims incurred is schedule 2, you have commission paid, which is schedule 3, and finally you have your operating expenses, all types of other expenses that come under schedule 4. Okay, now slightly different format, these amounts are provided to you. You're given 2 columns. One is direct business that you have, or this, I mean, we're talking from behalf of the company. So direct business which this business has, this company has with its own clients is called direct business, and this is reinsurance. Now added or included in this entire table, some of these amounts could be of reinsurance accepted, some of them could be of reinsurance ceded. Okay, it's just said reinsurance over here. So depending upon whether they are received, whether these amounts are paid, we have to decide what they are, whether they are ceded amounts or whether they are accepted reinsurance amounts. Okay, so let's see. We'll go one by one. First thing, premiums. Which schedule do we put premiums? Where will premiums come? Under which schedule? All types of premiums and all the adjustments that we are going to make the premiums, they are going to come under schedule 1. Okay. Now, direct business, we already know 75,25,000 is the premium on the direct business, right, that you have with your clients. Fine. At the same time, there is also some reinsurance premium. 8,25,000 is given in the first column, in this last column, first row. And then there is also premium paid, which is 4,90,000. Now you have to decide which of these is reinsurance accepted and reinsurance ceded. Both are in reinsurance column. Okay. Now, when you accept reinsurance from other insurance companies, you are the one who will receive the premium, right? Whereas, whether if you have ceded the insurance, this will of course also come under 1, you have given the insurance business to someone else, you are going to pay the premiums. You're going to take the premiums from your customers and pay them to this company to whom you have ceded the reinsurance. Okay. So in that sense, this 8,25,000 is actually reinsurance accepted, and the 4,90,000 is technically premium on reinsurance ceded. Why? Because it is paid. When you cede the insurance, meaning you give insurance to someone else, you also have to give the premiums to that business, which are actually, which you have ceded to them. Fine. And when you receive interest, it means you have accepted the reinsurance from some other company. Next is, now what we can do here is, as we read, we can also write the working note here, because in this particular problem you have been given the items in such a way that all three types of businesses are given: direct business, reinsurance accepted, reinsurance ceded. And also there are a lot of adjustments that need to be made in case of, in case of your premiums. Is that fine? Now in this case, for premium, we can directly put it in the revenue account. Premium from, that is schedules to the revenue account. Premium from direct business, okay, you can put it here, last column directly. You have 75 lakh 25,000. This is the amount. Direct business, that is our own business. Okay. Then to that, first you add. Okay, do the additions first. Premium on reinsurance accepted. Sorry, premium on reinsurance accepted. Now, this is the amount. When you accepted the insurance, you got the premium also. So add to that 8 lakh 25,000. 8 lakh 25,000. Fine. So if you add these two up, first do the addition. If you add these two up, you get 83 lakh 50,000. Okay, but you still have to minus premium on reinsurance ceded. So what reinsurance premium you paid? 4,90,000 is what you paid to the other company because they accepted to take your insurance. Okay, and after minusing this, what amount you get is 78 lakh 60,000. 78 lakh 60,000. So the net premiums after adjusting on
Means premium paid means ceded.
yes, correct. Premium paid means what? I'll just show you the go back to the theory we had done. See, when you are giving that reinsurance business to somebody else, you are also collecting the premiums and giving them the premium. So you're paying the premium. Followed? Like for example, we may have done it somewhere, but I'll write it again for you just so that we don't confuse it. Okay. So let's say, okay, look here. I'll use the same names as we did previously. We had used A and B company. So let's say A company, the main company. Let's say we are dealing with this company right now. Okay, this is that Metro insurance company or so and so. Fine. Or maybe I'll use the same names as Metro. Alright, that would, I think, make it a little easier. Right, so we are Metro General Insurance Company. Okay, this is our business. Now, we may get business and we may give business to other insurance companies, right? So, maybe just below you, there is another insurance company that has given you the business, A insurance company. Okay, that means they ceded it to you, they gave you the business and you accepted it. Fine. Same way, you have some insurance business which you have given one more insurance company, that is B. You are in the middle right now. So you may have insurance accepted from companies like A company, and you may also have reinsurance which you have ceded and given away to other companies. At the same time, you also have business from your direct business. Your own clients are also there, correct? And your other insurance companies are also there which are giving you business. Is that fine? Now what happens is, pay attention to this. When direct business gives you premium, do you have to give it to anybody else? Do you have to pass it on to any other insurance company? No. That is completely income for you. You keep that. Whatever amount the direct business is paying you, you take it, it becomes income for you. Okay. Now, if you have accepted reinsurance, for example, what this person has given you, a company, he has given you insurance, he has ceded it and you have accepted it. Fine. He has ceded, you accepted. So if he gives you premium, again, do you have to pass it to anybody else? Do you have to pay to anyone else? No. This again is your own income. Why? Because he gave you the insurance business and you can keep the premium with you. Okay. So what I write in green here is what is income. Okay. Both of these amounts are income. Premium from direct business, premium from insurance, reinsurance accepted. Got it? Now, let's say you have some clients, okay, I'll just use a different color to make it little more understandable. Let's say you have another client who gave you some business, but you passed on that business to company B. Okay, so what did you do? Company B, accepted your business and you ceded that business. Followed? Now you are both. You have accepted from A but you have ceded to B company. It's like that. Fine. Now this client might pay you some premium also because he came to you first with his policy, with his business. So what you have to do, his policy is not with you right now. You have ceded it to B company and B company has accepted it. So this premium which you receive over here, you have to pay over here. Put it in red. Okay, you will receive this premium from this client of yours. Okay, since you have ceded his insurance and given it to B company, you are going to pay the premium, pay off that premium to B company. Have you followed? So two insurance premiums are yours. One that comes from direct business. Again, let's just do the color coordination thing. Whatever comes from the direct business is yours. It's your own income. Then whatever comes from reinsurance accepted is premium received. Correct? This one here. This is premium received. Okay. So that is also yours. So you have to add it. Fine. Now, if you have ceded and given somebody else the business, then that is not your premium. Okay, that is on reinsurance ceded and that will be given as premium paid. Got it? Yes. And after deducting, you will get what is the net premium amount. Have you followed? So, if you have ceded insurance, it will be given to you as premium paid. You have paid it. You have paid it to the company to whom you have ceded the reinsurance business. Right? So, B company you are paying the premium to. So, premium paid is always considered to be premium on reinsurance ceded. So, coming back to our schedules, we have the final amount for schedule 1, which is the premiums earned. Okay, alternatively you can show this in the inner column and just show the total outside so that it becomes easier to transfer that total later. Okay, so schedule 1 done. Add what premium you have received on the reinsurance accepted, deduct whatever premium you have paid or given out on reinsurance ceded. Okay, then the next item let's look at is claims. Now claims on direct business. Now remember this is the other way around. Premiums are income, claims are expenses. Okay, so we will have the opposite of it. Fine. Now, in this case, when we say claims are received, that means it's an expense. Fine. And claims are paid, that means you are paying it on your own business, you are paying it on your own direct business. Fine. And if it is received, that means you are paying it on reinsurance which you have ceded. We'll look at it one by one. Fine. Now, for claims, you have many different things given to you. What is outstanding on the first of or the opening balance, how much claims are outstanding end of the year, and we know that whatever is outstanding for the current year we add it, and whatever is outstanding for the previous year we deduct it from the respective claim amount. Okay, hence we will do the working note separately for claims because there are a lot of items involved in it. Okay, so working note 1 I will do for claims incurred. Okay, so we will put it in 3 different columns. We'll calculate everything here first and then show it in our schedules. First is on direct business, second is on reinsurance accepted, and the third column we will have for reinsurance ceded. And we'll see what each one of these amounts mean, which one is received, which one is ceded, which one is accepted, and so on. Now let's see. First thing you write is the claims during the year. Let's take only the claims which are of the current year. After that we will take what is outstanding in the current year, what is outstanding in the previous year. So claims during the year for direct business is 49,70,000. Always write the direct business first. It's clearly given. You don't have any guesswork to do as to where it will come. So 49,70,000 is on the direct business. Next, there is 5,10,000. Okay, claims during the year is 5,10,000. Now what this will mean is this 5,10,000 will be on reinsurance accepted. Why do I say it is reinsurance accepted? Again, here you are given claims received. Okay, now when do you receive claims? Actually, claims is an expense, isn't it? And you are supposed to pay it to the clients. But when will you receive the claims? When you have ceded a particular insurance to somebody else, that person will pay you the claims. So you can pay to your clients. Okay, like for example, if I take a similar case here, and we are the Metro General Insurance Company, and let's say you had accepted from some client a particular insurance policy, and then you ceded it, like I said, to ceded that insurance to one more company, the B company. Okay, so this was ceded and B company accepted it. Now what happens is, if this client of yours suddenly came up with a claim, he suffered some damage and now he wants his money back, what will happen? You cannot pay him directly because you are not handling his business. That client's insurance business is being handled by B company because you ceded it, isn't it? So B company is going to pay you that claim money. So for you, that will be claim received, isn't it? And then further you will pass down the claim money to the client. It's same with premium, isn't it? Look at the previous case. The client paid the premium to Metro and Metro paid the premium to B company. So that time we called it premium paid. Am I right? But in this case, it is the other way round. We are talking about claims now. So B company is paying the claims to Metro. So Metro is receiving the claim. It is claim received. That means Metro is receiving this claim on reinsurance ceded. Fine. So the logic behind this is whenever you are given claims received, in other words, it means claims on reinsurance ceded. Is this clear? And this claim during the year is reinsurance accepted. When you accept the reinsurance, you have to pay the claims. Fine. So let's write this here. This amount on reinsurance accepted is 5,10,000. This is accepted amount. Okay. So 5,10,000. Same way, we'll keep on writing these first. Let's just go in the order and not confuse it. Claims payable as on 1st of April 2017. Last year's balance has to be minused. Claims payable on current year, end of current year's outstanding and has to be added. So to this, let us add outstanding as on 31st March 2018. How much is it? 7,38,000. Look at the second line, 31st March 2018, right? So 7,38,000 was on direct business. Sorry. Okay. And on the reinsurance accepted business, you had outstanding of 70,000. Okay. Similarly, we'll leave a line here for the total, right? Less. You have to minus what is outstanding as of the last year. Okay. So opening balance, that means balance of the previous year, is 6,85,000 on direct business and 95,000 on the reinsurance accepted business. So these were claims that you paid. Fine, we're done with all the claims which were paid during the year, either on your own business or on the business which you accepted, the reinsurance accepted business. So the moment you accept reinsurance from other companies, you are responsible for paying the claims. And these are all the claims that were either paid or that were outstanding. Okay. Moving on to received. Now we have just discussed that we say claims are received when it is on reinsurance ceded business. So the moment you give your reinsurance business to someone else, it is called, or you are going to receive the claims. Of course, it is not your money, you have to pass it down back to the client, but you will receive that claim money from the other reinsurance business. Okay, so let's see. Claims received on reinsurance accepted is 3,90,000, reinsurance ceded is 3,95,000. So let's write that. This is of the current year. You had ceded the insurance to someone else and they gave you the claim. So this is the money. Then as of outstanding as of current year on the reinsurance ceded is 1,25,000. That is supposed to be added. And outstanding as of the previous year is 75,000 and this requires to be deducted. Okay, less. Got it? Now we'll just do the totals. We'll add up all the things and accordingly arrive at some figure of the claims incurred. Okay, so if you add this up, you have 57 lakhs, because that's 49, so 57 lakh 8 thousand. If you add these two again, you have 5,80,000, and these two added up will give you 5,20,000. Got it? Now minus. Now I'll deduct all of these. You have first one after deducting 50,23,000. For accepted, you have 4,85,000, and here you have 4,45,000. Done. So far we feel that claims incurred are these many. Now some adjustment is given related to claims incurred. If you look at the first column here, okay, there are some expenses that are included under claims, under some other expenses, which are actually expenses related to claims. So next we are going to see how to adjust those expenses as well.